Hello guys, welcome to this amazing video, and I just want to talk about a trade breakdown of a trade that I took on GBPCAD, so that we all can learn from it and try to execute good trades, right, with the knowledge that we will get from this. Okay, so for the general population of traders, right, there are lots of people that really don't have a complete knowledge of how market move, right? How the foreign exchange market move, and sometimes some result into some certain kind of patterns that they can identify. Sometimes some refer to certain kind of confirmation for entries that will call. And people have different means by which they identify how they want to execute a trade, of which no strategy is 100% efficient, right? Because we traders are not the market makers, right? We are not the one that instigates what's happening in the market. We just tend to follow some certain kind of patterns that have been tested before, right? And that might work if price presents itself in that or in a particular kind of story, right, of chart presentation. Okay, so this trade, I just want to break it down for you, and you having the understanding of what structure is, right? Having the understanding of what liquidity is, you should be able to understand this breakdown. So let's start writing. Okay, so from what we can see, right, we have price moving in an upward trend structure. Okay, have price moving an upward trend structure. We can see the significant highs and lows, high, low. Price created a new high, right? Grabbing this previous external liquidity, right? When price grabbed this external liquidity and price attained a new high, what happened? Price traded back to discount, right? To somewhere around here to pick up entries, of which price would have given confirmation. Okay. You know, after price comes to mitigate here, right? Price would have given a certain kind of intent for us to now continue to the next external liquidity. And of course, you know that external liquidity are weak highs, right? They are unprotected highs, and that is always our target if we are in line with a particular trend, right? After catching reversal moves of retracement, you want to target the next external liquidity and so on and so forth. So this was the last external liquidity. This was the last external liquidity, right? External liquidity. So this was the last external liquidity, and price already grabbed it. Price already grabbed the last external liquidity, all right? And I am interested in buying, right? When price retraces back to any good region or zones that I actually want to buy, right? And I have my highs on some few, okay? The first one I want to be interested in, number one, I'm not even interested in anything that happened in this structure range, right? That is the structure that we had after price are taking out external liquidity, all right? I am interested in what is formed below, like what caused this switch, okay? And the first demand I'm interested in, right, is this one right here, right? You can see a demand right here. And what is the reason for me being interested in this demand? All right, I'm interested in this demand, okay, for two reasons. Number one, it was the immediate demand that caused price flip, because every external liquidity or every base at an external liquidity is a potential supply. That is, it is capable of reversing price depending on what story, right, price has been from the left, right? So they have the tendency to actually reverse price, right? So the last demand that takes out an external liquidity, I am very much interested in it to see what price wants to do around that area. Okay, so this is number one. This zone here caused a flip. Then number two was because it engineered liquidity, right? Liquidity validates zones. Because it engineered liquidity, it has given me more confidence that price might most likely use it, right? But then that is not just enough. Once you have a zone, right, you really need to wait for price to actually set you on motion, for price to introduce the movement for you so that you can know how to follow it. And aside that, the only other valid zone that I might want to look at is somewhere around here. This is an unmitigated zone here. I don't think I'm interested in any of this. This has been perfectly mitigated by this. So if price wants to come, if price wants to even come around this area, price will induce these two guys. There's perfect mitigation here. This is actually very nice because it took out this last high. So in case price doesn't use this one that I have above, right, I might most likely be interested in somewhere around this area, which is even lying below Asian low, right? We have perfect negations all around here. So this is my valid demand that I'm looking out. So this is my flip, okay? Demand that took out this external liquidity. All right, so I just want to see what price would do around that area. So price came here, started dropping, okay? So let me go to a much more lower time frame, maybe 15 minutes to see what price did. All right, let me go to 15 minutes to see what price did, okay? So you now want to be calm enough, right, to check for the formations of price. Most probably price mitigating that zone and breaking a lower time frame structure, all right? Or price entering into that zone, enter into a range, engineer liquidity, break structure, then we can then enter. So let's see what price actually did so that we can actually follow the story and see if we can actually catch a good trade, all right? Okay, so let's see what price did here. All right, so price came into the zone and price tapped into the zone. And we can see that price is somewhat in a range kind of movement. Price is somewhat in a range kind of movement. And at this region, right, I was already interested in price, right? Let's see what price actually did here, okay? So we can see that price entered into this supply, right, and give a reaction here. This simply means that we have substantial buyers around this area. So we want to see if those buyers have the ability to flip the direction of price so that we can now trade in a new direction, all right? So what happened? You can see the range structure around here. What I'm actually looking at is price, engineering liquidity, then taking out liquidity and breaking structure. So from what we can see here, right, this was still like the last significant high that we had right here. I mean, significant low that we had inside this zone. So what we can see that price, there was a move during London, right, that swept this liquidity, but still within this zone and broke structure. What I mean break structure, I mean, you know, we have price coming down here, right? Lower high, lower low, lower high, lower low, right? And of course, we had this little range that we had here. The price entered into a certain kind of structure right here, okay? And what happened? We had a low, then we had a break of structure. So immediately this happened, because I don't want to miss out on the move, right? I decided to actually trade from this region. Trade from this region, this other block right here. Okay, I said to trade from here, and I had my position locked in. So I had to trade from here. Had my position locked in. All right. I had my position locked in right here. Okay. And my stop loss was just below this zone. All right. And of course, my target was going to be the next external liquidity, because that is where we are actually meant to target, this next external liquidity right here. Okay, this was where we were actually meant to target, this next external liquidity. All right, so which is around 10R, right, with a very minimal stop loss. So the next thing price did was price violated that area right there. But now we actually now have the true break of structure. Actually, we now have the true break of structure. Okay. So the reason for this earlier entry is so that I don't miss out on the move, and price has actually broken significant structures, right? But this move just seemed perfect to me now. Price came back to grab liquidity and take out all early buyers. Then we now have the proper shift. This is now the shift, right, that I was looking for. Even though I thought it had happened earlier. So this was the shift that I was looking for, right? For price to take out. And after price took that out, I was now actually more confident in the trade. So I think I went to a more lower time frame to see if I can spot out for very nice zones to actually buy from. All right. So after price grabs liquidity, okay, this was actually a very nice zone to have bought from. Right after price grab liquidity. I think I needed to spot out for a valid order block. All right. So I was very much interested in buying here, of which this still serve as liquidity for me to be grabbed for us to actually now trade higher. All right. So this was a very perfect zone for me to actually want to trade. So let me go to 15 minutes. All right. So you can see the zone that I have just right here. Okay. Waiting for price to actually mitigate this zone right here. So I had my entry here and I was waiting for what price would do since we have actually been taken out. So this is a new day, right? Price, after price took out this high, price did a little range that started falling. So a new day, this was Asian session, right? We had Asian high and Asian low was going to be around there. So, and this was a buy setup, like, you know, coming on a demand that I'm expecting to buy. So most likely price might actually engineer Asian liquidity, take out Asian low to tap into this zone before we can now eventually buy. So let's see exactly what price did around this area, okay? So let's see what price did around this area. And price took out Asian low, right? Tapped into that zone, and what happened? We actually traded higher and price met our targets. You can see the entry right there on the screen, okay? So this is just how you should try to actually follow a trade, right? The fact that you have a POI. POI simply means is a point of interest, a place where you are interested in executing a trade, right? Or a place where you're interested in knowing or seeing the behavior of price, right? For a possible change in direction or for a possible break of that particular zone. So it is an area of interest, not an area of execution. Don't just execute when price gets to your area of interest, because price could as well take out this zone, right? Price might actually come like this, for example. Price might come like this, right? Come like this, and take out this zone and mitigate a certain supply to continue downward. You get what I'm saying? So the fact that here's an AOI, it simply means that you will wait for price to give you the necessary kind of confirmations so that you can actually trade very well. So this is the trade that I took there. And of course, price met our targets with ease because we are in line with structure, okay? Once you are in line with structure in the upward direction, always target your external liquidity. Once you are in line with structure in the downward direction and you catch a sell at premium right after confirmation, always aim for your external liquidity, okay, lows, so that you have a very, very, very good risk to reward. Like this was this was 1:5, right? Risk to reward. We first missed a 1:10 right here. I think it was even much lesser, right? I think it was around 6 hours for me then when I took this trade. And price delivered perfectly well. You can see the entry there, perfect, and we had a good trade. So guys, I want to believe that you actually learned from this. Do so well to follow me on all my social media. My YouTube, Mr. PickFX, my Instagram, Mr._PickFX, right? And if you're interested in private mentorship, always ensure that you private chat me, right? Via any of the link to my personal Instagram or my IG. And you can always have access to mentorship anytime you want. Thank you very much. Have a wonderful trading. Bye.